Welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. With me is also Shell Bhatnagar on the show. Well, it looks like the markets are doing better than the morning trade because more of the most sectors are now turning themselves into the green, especially led by PSU banks, small caps, the IT space that has sprung back sharply in trade. Over 1% gains in all three indices is definitely pulling up all the action. The Nifty is hovering above the flat line right now, 15 points higher in trade, 22,468. Whereas the Nifty bank that's turned into the green, led by large support coming in from the PSU banking space and the financial services space as well. On the Nifty, you have Shriram Finance, Tata Consultancy Services, Bharti Airtel, Axis Bank, Divi's Laboratories and Tech Mahindra as the top movers on the Nifty. On the lagging side, however, you do have some stocks which are Nestle, for example, that's down and out because you can actually see MK has began its coverage with a reduced rating on this one, so some pressure building up on that. Bajaj Auto, HDFC Life, Kotak Mahindra Bank, Dr. Reddy's and Britannia still remain in a lower zone. But the broader markets is where all the action is really emerging in. A whole host of stocks from the oil and gas basket, a whole host of stocks from the finance basket, the home finance companies, they are doing well right now. Canfin Homes, Manappuram Finance, those are the kind of stocks that are doing well. Some of the fertilizer stocks are also pulling up into trade right now. Looks like it's going to be an exciting last 1 hour of trade. And joining us on the show is Vinay Rajani now. He's a CMT Senior Technical and Derivatives Research Head at HDFC Securities. Good afternoon and welcome to the show, sir. Do tell us what is your own sense as far as the markets are concerned. Weekly expiry on the Nifty Bank, and how do you expect the expiry to pan out?
Yeah, so today is a Bank Nifty expiry, and we have been witnessing that Bank Nifty has been outperforming and holding its strength. And Nifty is also near its all-time high. So overall, we are outperforming the global market. So despite the weak US market closing and weak Asian markets, we have managed to remain strong. And especially the breadth of the market is quite strong. Especially if you look at the mid cap and small cap, which have been the indices have been rising for last 7-8 consecutive sessions. So somehow we are showing decoupling and the kind of resilient move is there in the broader markets. I think the overall sentiment is positive as far as the Indian benchmark indices are concerned, and we are very near to the all-time high in Nifty, and I'm expecting Nifty to register a new all-time high and go beyond. So right now the level is 22,450. I'm expecting it to go beyond 22,700 in the coming days. And overall, as you said, that Bank Nifty expiry is there, and till now Bank Nifty has not shown any movement. It is trading flat right now. So it might happen that because of the weak global cues, we will not get a very strong close today. But even if it sustains here, it's okay. So I'm not expecting a very big movement in the as far as expiry is concerned. It may remain in the range of 47,400 to 47,500. But overall market sentiment is good. That is a good sign. In the coming days, we will definitely see a breakout in Bank Nifty and Nifty as well. But for especially for the expiry, I don't see a big movement to come in the next 1 hour. And I'm expecting Bank Nifty to remain range bound only. But broader market will continue to outperform in today's session as well as in the coming sessions.
After this very generic view of the market, let's look at where the action is and where traders are paying attention. There are two sets of stocks that are doing phenomenally well. One is the defense space. We look at Mazgaon Dock. We look at Cochin Shipyard. Very heavy volume that is accompanying these two states. And of course, the gold financing companies, Manappuram Finance and Muthoot Finance. Record highs on the precious metal have induced traders to take long positions on both Muthoot and Manappuram. Muthoot actually is almost headed towards its all-time high, which was seen about a couple of weeks ago. And at the moment, Muthoot is trading at about 16, 18, 3.5% higher. Mr. Rajani, any view that you would have on Muthoot Finance at current levels? Is this momentum likely to continue?
Yeah, definitely setup is quite strong, and it looks like both the stocks are headed higher, and the Manappuram and Muthoot both are NBFC gold finance companies, and gold is rising. Gold is hitting all-time high in the international market, and sentiment is quite strong. And overall, NBFC space has also recovered nicely. If we were to look at the stock like Bajaj Finance, Chola Finance, L&T Finance, M&M Finance, all these NBFC have shown nice recovery in last 1 week. And so overall sentiment has improved in the NBFC space. And these two stocks, Manappuram and Muthoot, are related to gold finance. So that is also icing on the cake. And the stock has hit the all-time high today, Muthoot Finance and Manappuram Finance. So I think this rally could continue, and we may see next 7 to 9% up move from this level also. So it's a fresh breakout on the medium to long term chart. It's a good development. We might see some running correction, but that running correction should be utilized to create long positions, fresh long positions. And ultimately, I see if you were to take a next 15 to 20 days view, definitely these stocks are headed higher, and we can easily see 8 to 10% up move in these both the stocks.
Okay. Vinay, also getting your attention within the PSU pack, very, very strong volume breakouts that are coming in. And you see the likes of Punjab National Bank, Maharashtra Bank, Canara Bank, again recouping their lost mojo. Anything within this space that catches your fancy? PNB is up about 4.9%. And if you see the volume that is coming onto the counter, it's about 1.66 times the 5-day average. Your view on PNB?
Definitely. So if you ask me to choose one stock from the PSU bank, the first would be PNB only, because we just a couple of minutes back only we recommended to our clients, and our open position is there in the future segment, and we see a clear cut breakout on the chart. It is a fairly liquid stock and large cap PSU bank, we can say, after SBI. So it's a clearly breakout case, and we should not miss this opportunity. I feel that it is headed higher, and 5 to 7% up move could be there in next couple of sessions. So this is one of the best placed technically, we can say, PNB. So definitely it is a breakout, and can be one can create a fresh long position. Support I see around 127. The current market price is 132.50, 132.60. So 127 should be the stop loss, and I am expecting that this stock is headed for the target of 140 to 143 in the coming session. The other stock which is looking from good from this particular space is the Bank of Maharashtra. So it is not there in the F&O segment, but it is one of the fairly liquid stock, and have been performing very good since long, and remains resilient in the market fall, was the Bank of Maharashtra. So I think Bank of Maharashtra is also looking very strong positionally. So we can expect a good returns. Right now the rate is 66.70. We can expect that this stock could go up to 72, 73 targets. And if you were to keep a stop loss in trading long position, I think 64.50 should be the stop loss. So these are the two stocks which I like technically from the PSU bank. First is PNB, and the second one is Bank of Maharashtra.
And these are very well chosen for two reasons. These are low ticket items, and of course they are very, very high beta. Both of them, they run up very sharply because trader interest is very high, and that's visible in the volume picture today. Vinay, two stocks I hesitate to take views on, but we'll mark them on the charts and seek your indulgence. One is Cochin Shipyard, record high. It's been running for the second day in a row, and the other being Mazgaon Dock, up about 10%. Since the percentage rise intraday is pretty high, I was just wondering if you would want to step in on these two.
Yeah, so both the shipping defense related stocks have shown a very good movement in last 3 4 sessions. And if you were to compare these stocks within this particular space, then Cochin Shipyard is the strongest amongst the all, because it is trading at its all-time high. And a couple of sessions back, we saw that the leadership was there in the Cochin Shipyard. Mazgaon Dock and GRSE, both these stocks actually took a follow-up and catch-up rally was kind of move was there in the Mazgaon Dock and GRSE. So if you were to compare within this particular space, Cochin Shipyard looks very strong, though it has risen a lot in last 3 sessions. So risk reward ratio may not be that much favorable at this point of time if somebody wants to take fresh long positions. So definitely positionally it is very looking very strong, looking very strong on the chart, and dips should be bought into. So right now the rate of the Cochin Shipyard is 1069. If you find this stock 4 to 5% lower than this, then there could be a fresh long opportunity in this counter. So definitely they are looking good on the positional charts, but dips should be utilized into. And if you want to choose only one stock, then I would rather go for the Cochin Shipyard as compared to Mazgaon Dock or GRS.
Okay, Mr. Rajani, a whole host of other pockets are also moving in trade today, and that's the comeback of the IT space. I mean, L&T Technology Services leading the momentum, 3% higher in trade. We have Coforge, TCS, Emphasis, Tech Mahindra, HCL Tech. All of them are buzzing in trade. What does this signal to you? Is this momentum here to stay? What would you really pick?
Yeah, so definitely sector rotation could be there, and IT is the one space which has not performed in last couple of weeks, and because of the sector rotation, overall markets are good. The sentiment is positive, so it might happen that on one day real estate performs, and on the second day some other sector will perform. So that kind of moment is there, and after a long underperformance, I think there could be a chance of short covering in the IT related stocks. So if I were to choose the strongest amongst the pack, then TCS looks good to me because it is a purely a bullish engulfing candlestick pattern on the daily chart, and previously also it outperformed. So overall, TCS looks stronger at this level, and this could be a short-term bottom for the stock like TCS. And as you mentioned, that the stock like LTTS, Larsen and Toubro Technology, this is altogether different chart. It is into its own orbit, and the stock is at 52-week high, and rather it is at all-time high. So the overall setup is quite good. It has remained resilient while other IT stocks were correcting. So I think these two stocks are looking very strong, TCS and LTTS, and I think this rally could sustain in coming sessions also. So one can definitely pick and choose these particular stocks from the IT space, and overall IT sector can also bounce back from here, and they can continue to show the pullback which started today. So TCS and LTTS I like from this particular space.
Okay, TCS and LTTS is what you like from this space. From the pharma pack, especially the diagnostic chain stocks, they are coming back in trade, especially in the F&O space. I can see names like Loris Labs, Divis Labs, they are the ones that are pulling up in trade. Is there a momentum here that you would like to trace?
Yeah, so DV's lab has done well. In fact, DV's lab has risen significantly in last four sessions. If you were to take a price of 27th March, the stock was trading at 3350, and
Hmm.
today's high is 3726. So more
Hmm.
than 400 points rise we have seen in the DV's lab. So no doubt it is looking strong as of now, but in looking at the rally which we have seen in last 4 5 sessions, it becomes a bit overbought on the short term charts. So in this, we can take approach of buy on dips. Let us wait for some dip to come. Support I see for the DB slab around 3580 to 3590, which happens to be the 50 days and 200 days exponential moving average. So once you see this stock coming down to that support level, then we can initiate a fresh long position. The support is around 3600 approximately, we can say. So let us wait for some dip to come. Definitely, the stock is looking good positionally, but wait for the dip to come, and 3600 is a strong support where traders can take a fresh entry with the stop loss.
Okay, let's also now start paying attention to the PSU pack. We track 78 PSUs for you, and today has been an exceptional day. We've discussed the defense plays, we've discussed the banking sector, and at this moment, if you see, a lot of activity is coming into two financing companies on the power side, which is Power Finance Corporation, 2.5% higher, and of course REC Limited. Vinay, any of the two stocks, any one that catches your fancy, which has a stronger chart out of the two, Power Finance and REC?
So both have the similar setup technically, and there is a trend line breakout in both of these stocks. So it is very difficult to come out with only one stock out of that. So both setups are almost similar. So
Hmm.
PFC as of now looks good to me. 1920. Oh, very minor differences there in between these two. But PFC, which is making new highs right now in the day's session, I think, and it has also surpassed the resistance of 50 days EMA. PFC can be looked at. It is one of the PFC power related finance company NBFC. So looking stronger on the chart, and it is headed for the next resistance of 435. So current level is 418. Next resistance, which happens to be the previous swing high, it's placed at 435. So I'm expecting this stock to reach to that target first, and stop loss can be kept at 405. So keeping that stop loss, one can go along with the target of 435. So PFC looking stronger as of now.
Okay, I hesitate to again mark Muthoot Finance, but the price action here is phenomenal. You see 1654 in cash, and the reason why I mention it is that there are two block deals that have happened for 1.5 crores and 2.2 crores almost, and the all-time high for this counter was seen somewhere in November of 2021. Absolutely there. Maybe a day or so, and you will see more fresh momentum coming in, because the stock has already run up by about 7 trading sessions. We are just showing it to you on the screen. This is one of those momentum plays that are doing phenomenally well on the back of higher gold prices. We often don't discuss another stock, which is Policy Bazaar, PB Fintech. Fairly strong volumes coming in on this one. And what is really interesting is, ladies and gentlemen, this is also the highest level since 12th of December 2021. Why I mention this? Because this was the month from which a very deep correction set in. The stock had listed in November of 2021, and it is just about to sort of complete that whole journey. The all-time high is 1457, the all-time low is 370, and from then on at about 1127. Vinay, would you have an opinion on PB Fintech, Policy Bazaar?
Yeah, so as you said, it listed in November 2021, and that high after that we saw is 1470. The current levels are around 1190. The kind of resilient move it has shown in last couple of months, it is quite strong. It is one of the few fintech company which is holding at higher level, and holding its level near its 52-week high. So I think the setup is quite strong, and currently for last 3-4 weeks we have been witnessing some consolidation near this 52-week high. But once we see stock crossing 1210 level, which is the recent swing high, then we could see a momentum coming back into the counter with the volume. So right now consolidation is going on near 52-week high. Once we see 1210 getting surpassed on the upside, then we can expect the stock to hit a new all-time high. I'm expecting this stock to surpass the previous all-time high 1470. So quite a strong setup right now. And as far as short-term support is concerned, 1100 is a very strong support which should not be breached. And keeping that stop loss in mind, one can continue to hold on to the long position and keep this stock on a trailing stop loss basis, because overall setup is quite convincing, and I'm expecting that this will hit a new all-time high, and the potential is quite high. So definitely one can continue to hold on the long positions.
Okay, Mr. Rajani, there are several other subsectors also that are moving in tandem. One can look at the fertilizer space. Several of stocks over here that are in momentum. I had pointed out Gujarat Narmada Valley Fertilizers in the morning. Now it's up at day's high, 11.7% higher in trade. Along with it, GSFC is on the move as well, and Deepak Fertilizers has also picked up some momentum as of now. So GSFC is up 6.7%, trading near the high point of the day. Huge volumes can be seen on this one too. Deepak Fertilizers again is 5% higher in trade as well. What do you see, in this kind of a pattern being seen along all the fertilizer majors? Is this a momentum that will sustain?
Yeah, so for last 3 sessions, fertilizer stocks have done exceptionally well, and the all NFL, RCF, and especially GSFC did very good performance. And Deepak Fertilizer, as you said, it is more into a chemical sector, chemical kind of sector we can say. But the technical setup of Deepak Fertilizer is quite convincing. It's a fresh breakout, and it's a purely a reversal case. It has underperformed a lot previously, and now it seems to have reversed its trend and headed higher. The stock is headed for the next target of 586, which is the 200 days exponential moving average. So I'm expecting Deepak Fertilizer to do well. We also recommended this stock to our traders, and that targets were achieved. But still, I can see the strength is there and a pure reversal case. So we can have a bullish view from this level as well. So for the short-term traders, 585 is the first resistance, and once that is taken out, we can expect some higher levels after that also. So continue to hold on to this long position, and from here as well, one if somebody takes fresh position, then the stock like Deepak Fertilizer can do well. The another stock from the fertilizer space which has just given a breakout on the weekly chart is the Chambal Fertilizer. It's an FNO stock, a bit liquid and a large cap fertilizer stock, you can say. So it's a clear cut flag pattern breakout on the weekly chart. So one can also look at the stock like Chambal Fertilizer. So both these stocks, Chambal Fertilizer and Deepak Fertilizer, both are looking very strong at this level as well.
Okay, so that's as far as the fertilizer space is concerned. The other space that's buzzing is the entire sugar space. In the morning, our guest Mitesh Panchal was the one who said that, you know, sugar space is something that he'll watch out for. He talked about Balrampur Chini, but I can look at Awadh Sugar, Bajaj Hindustan, Sri Renuka Sugar, Dalmia Bharat, all of them up in momentum. Anywhere between 3–3.5% of move can be seen here. Is this a space that interests you, Mr. Rajani, and would you chase the momentum here?
So I can see that the sugar sector has first time come and sustained at the higher level, because in last 7–8 months I have not seen sugar sector sustaining at higher level, and this is the first time I can see the strength, and it is sustaining for last three sessions. So definitely one can have a look at it, because there are fairly liquid stocks in this particular space. So I would rather choose a liquid one, and which is Triveni Engineering. So Triveni Engineering is into a sugar space and looking very strong. Though it has not moved that much. It's just half percent up today as compared to the other stock. But looking at the quality and looking at the liquidity, which is Triveni Engineering is holding in the sugar space, I think traders should look into this particular stock. So from this level, I am expecting Triveni Engineering to come to the target of 357, 358, and the short-term support is placed around 320 odd level. So keeping that stop loss of 320, one can expect a target of 358. So overall, if I were to choose only one stock from the sugar space, I would choose Triveni Engineering.
Let's now just step back a bit. We've sort of highlighted a lot of stocks to you across sectors that are buzzing, and by now you would have sort of gauged that this is a broad rally, and these are interesting times for Dalal Street. Ever since the fresh financial year has become on April 1st, we've seen a very sharp traction coming in across the board in the broader markets, even though the main index, which is the Nifty and the Bank Nifty, have remained sideways to flat. The Nifty, in fact, is now down about a single point, 22,451. Let's now take a pause and look at what the broader markets are doing. The advanced decline is very strongly in favor of the bulls. 1,600 stocks on the National Stock Exchange are in the red, compared with 500 in the green. Early morning, there were 4 out of 19 indices that were in the green, and now only 4 are in the red. So during the day, the tide has turned in favor of the bulls. And if you look at how the Nifty PSU banking index is doing, 7261 for you. The all-time high on this one is 7441. It is only a matter of time when that will be scaled. In the Nifty small cap 100 index, you see 16,135, and it's the highest since March of 1st, which makes it about a 1-month high. Out of 100 shares, 76 are in the green. The next is the mid cap 100 index, 49,786 for you, and this is at an all-time high. Very strong rally and momentum coming into mid caps. So if you feel that the markets are quiet on the Nifty and the Bank Nifty, nothing could be further away from the truth. The granularity of the market is doing extremely well on the long side. I see so many stocks. We've discussed Power Finance Corporation. We've discussed Chambal Fertilizers. The two other stocks that I need to mention is City Union Bank. It's at 151 rupees, third, fourth day of gains. You have stocks like Indian Overseas Bank moving very sharply at about 67, and of course the all-time favorites Bank of Baroda 274 again at day's high. The Nifty sadly at the moment 6 points lower, 22,450. Sakshi.
Okay, let's again, focus on some of the stocks that are buzzing in trade. It's Bharti Airtel that's pulled up, on the Nifty. It's 2% higher right now. Remember, its subsidiary Bharti Hexacom has opened for subscription today as an IPO. Mr. Rajani, Bharti Airtel for you. How are you looking at the charts, and could you tell us where do you see the prices headed?
Yeah, so it is hovering around its all-time high, which is the 1245. The current level are 1231. So basically, it did very well previously, and primary trend was up. The higher tops, higher bottoms were there, and the stock has been holding around its all-time high. So I think it is a resumption after resumption of an uptrend after some consolidation or running correction. So it is headed higher. Today's low becomes the very strong support for the counter. 1190 is the today's low. This can be kept as a very stop loss for the trading long positions, and on the trading basis I think we can hold this particular stock, because the stock which is trading at all time high, it's better to have keep it with a trailing stop loss basis, because it is better, always better not to anticipate any particular target for this particular counter. So I would suggest a stop loss of 1190 and keep it the long position on the trailing stop loss basis.
Okay, so that's as far as Bharti Airtel is concerned. Let's again look at some more stocks that may be catching our attention at this point. From the F&O space, let's look at Escorts Kubota. The stock is, 4.5% higher in trade as far as the F&O space is concerned, and this stock has been in momentum for the last few trading sessions. If we look at the last 5 days move, it's moved up 10 odd percent. How would you look at Escorts Kubota?
Yes, so it is a clear breakout on the weekly and daily chart, and today it has moved up by almost 5%, and volumes are almost 5 times what average volume was there in last five trading sessions. So quite setup. It has reached above its 50 and 200 days average, and today this auto sector has bounced back nicely after 2 days of correction. It has resumed its uptrend. So is Escort looking very strong? The next resistance I see for the Escort is at 3060, which is 2% away. But once this level is taken out on the upside, then we can expect Escorts to reach to its all-time high, which was quite away, and was around 3,400 odd level also. So we have to see whether this 3060 is getting taken out or not. Once that is taken out, we can expect an all-time high, which is around 3,400.
Yes, sir. Escorts has come back into circulation after a gap of maybe 3-4 months, and the all-time high on this one is about 3,400. There's a change in digit as far as the stock is concerned, now back above 3,000. Ladies and gentlemen, we are now at 3 p.m. The last half an hour wheel of the market starts on Wednesday. Remember, tomorrow is the F&O expiry, the first weekly F&O expiry for the Nifty during the month of April, as also the first weekly expiry of this financial year. So far, the tone and the tenor of the market is fairly good. Let's look at, while the Nifty is flat, let's look at the contributors as to what is maintaining this strength.
Yes, I can hear you.
TCS, it's contributing 18 points. Bharti Airtel is contributing 13 points in the green, and Axis Bank is contributing 11 points in the green. What's pulling the Nifty lower? It's Reliance and Kotak Bank, 27 points for Reliance and 9 points for Kotak. So this is how it is for the moment, and a very strong rally seems to be starting for AU Bank. We'll just mark the price for you. It's not one of those stocks that we sort of pay attention to, but a nice swing trade in the making. Vinay, would you have a sense of what AU Bank is likely to do?
AU Bank, yes, after a healthy correction, it has moved up. primary trend is not that strong. We have many stocks in the NBFC space which are looking stronger on the chart. No doubt it has moved up by 2.5%, but for that market has to sustain at higher level, and in that case only the a stock like AU Bank can do well. But looking at only today's price action, volume action, I think trade can be taken with a strict stop loss. So primary trend is not that strong, but it could be a reversal case, and in this case we have to take a strict stop loss, and strict stop loss comes at around 575 odd level. So keeping 4-5% stop loss from here, we can expect a higher level, and the next resistance for the stock is comes around 625, and above 625 the stock is looking stronger, and 670 is the next resistance. So these two resistance 625, 670, and the stop loss of 575 is recommended. So overall trend is not that much strong, but keeping a stop loss, one can take a trade.
Okay. All right. Many thanks, Mr. Rajani, for being with us on the show and helping us with all your views on the markets and several stocks that you have discussed with us today. Appreciate your presence on Business Today television. Time now to also welcome our other guest on the show. Sharad Vasti now joins in. He's the head of research at Smiths now with us. Sharad, very good afternoon. Good to have you with us on Business Today television and on Market Today. Tell us, what is the sense that you have as we begin a new fiscal year? Where exactly are you looking with newer hopes for value creation?
Yeah, good afternoon to you. Good afternoon, Shalji. Broadly, the view remains the same. We are expecting a post-election rally, which should be good enough, carried in the second half of the calendar year. First quarter, we might have a more or less listless kind of trading, though the way the markets are going up, it does not look like listless, to say the least. So I think, yeah, the first 2-3 months, maybe you might have a lackluster kind of movement, but beyond that, I think the second half should be very rewarding for most investors in equity markets. The strange thing is that most asset classes are moving in tandem, which should not move in tandem. Whether you talk about gold and equities, usually they don't move in tandem. But now they are moving in tandem. I think the second half would also have the interest rate reversal playing out globally as well as in India. That should be a very positive one for that. And within the sectors, I think, yes, agrichem is something that I remain bullish on. I think most of the excesses are getting absorbed now. So most probably during the second half, you will have a strong revival there. Add to that the recent correction in IT, or gets you a very good opportunity to invest in. I think as the interest rate scenario reverses in US and recessionary fears die down, there is a high possibility that IT would see a very smart pullback from current levels.
Okay. Good afternoon to you, Sharaji, and as always, it's such a pleasure to have you on Market Today, and especially at a time when we are at the cusp of quarterly earnings. Tell us, what are you looking forward to as far as fourth quarter earnings are concerned? Any one or two stocks that may outperform fundamentally on earnings and therefore might also look good on prices. What catches your fancy?
Shailji, to comment something on quarterly numbers becomes a bit difficult because nowadays everything is priced so much in advance. But if you look at the normal numbers, I think in terms of the quarterly numbers, ideally this is a quarter where we will not have a low base effect. Last year, March quarter onwards, the numbers were very normalized. So I think you have a high base effect. So most probably we'll keenly watch for what kind of year-on-year growth we clock in. Banks would continue to do well. They have been on an improving trajectory over the last, 3-4 quarters now. So I think the higher base effect is something that we are a bit skeptical about, that how the numbers will play out. And maybe the expectation build-up could be a bit on the higher side vis-a-vis what you actually expect. As sectors, I think across the board, maybe autos could continue to do well. The quarterly numbers have been good. Most of the EPC and defense-oriented companies have reported good provisional numbers, so I don't think there are any hiccups. On the bank side also, we are not expecting any kind of NPA accretion or NPA rise, and advance and deposit growths have been normalized. So largely, I think it should be a good quarter. Historically, March quarter is usually better for most insurance companies, so could be that monthly data has also been pointing to that. So I think maybe insurance companies could be a bet you could take in the last quarter. But across the board, I don't think, other than insurance, you have some sectors where most probably the numbers would be an outperformer. Most numbers would feel the pressure of a higher base last year, March quarter. So year-on-year numbers might not look that rosy as they have been looking for something.
Okay. The other more interesting and macro point in the market is the beginning of the Monetary Policy Committee meeting today. The result will be out on Friday 10 a.m. By the Reserve Bank of India Governor. Sharad ji, anything out of the ordinary that you expect in the Governor's speech as far as outlook on liquidity is concerned, or it's going to be exactly, how should I say, a non-event?
A non-event, but I think it will be an event that will give you some direction. And across most central banks, you will see that echoing that people will gradually come in to focus more on growth rather than just, be single-minded on inflation and other issues. But gradually, I think most economists are and bankers are understanding. Even if you look at the last monetary policy, I think there was a split between two of the committee members. They were of a different opinion. That maybe the interest rate differential is a bit on the higher side, and we need to cut it down to support growth now. So I think gradually that will come in. More people will devolve into it, but globally the situation has been swinging either way so fast that it's a bit difficult for central banks to take a call. But I think at best, maybe they come out with a smart view that they do suggest a small cut. But ideally, I think the next policy meet onwards, you should be expecting rate cuts rather than this one.
Okay, Mr. Avasti, could you tell us what is your view on PSU banks that are in the thick of action versus the private sector banks now, and how would you expect this entire space to move forward from here?
On the PSU side, I think barring SBI or maybe some of the smaller banks which have usually been operationally very superior, like an Indian bank or something, I don't think an across the board rally is warranted, even if the expectations do turn out as they are for the next 1.5 year, where advances growth happen and you do not have an NPA overhang. Then the provisions are also more or less optimum, so no requirement of big fresh provisions would substantially bolster your earnings. But I don't think that's going to be very material, and the type of expectation that is being built into prices right now, I think they will find it difficult to come up to these levels. And I don't think that fundamental numbers will support them. Though on the private side, I think, yeah, HDFC and Kotak could be very good dark horses that you could be betting on for the next 6 to 9 months. As most other things that they are doing, they start to emanate into the numbers. There could be a lot of synergy benefits for HDFC. There could be a lot of change in attitude that Kotak is bringing in that should start showing in the numbers over the next 3 to 6 months. So I think these are two banks that I would largely bet on the private side, and on the PSU side, I would largely focus on SBI if I have to take an investment on the PSU side.
Okay, HDFC Bank, Kotak Mahindra Bank could emerge as dark horses over the next 6 to 9 months odd, and one should keep an eye out on this as well. How about the IT space, sir? There is some uptick, but it's largely been an absent player in the markets up until in the recent run-up and in the recent run-up of the record high levels as well. Some ticks here and there, but is this move to be chased?
Yeah, I think it's providing you a very good entry point, whether you consider the frontline stock like an Infosys. I think 1800, 1850 could be fair value for the stock. And once re-rating happens, you all know that it can happen at a very fast clip. Similarly, on the second rung, I think LTM Mindtree is an excellent bet. It's corrected substantially. I've been an advocating to buy it for quite some time now. But I still think that it's a very smart space to be in. The type of growth that they can clock in with the merged entity. Again, synergy benefits would be big enough. And once that starts showing in the numbers, I think a lot of re-rating can happen at a very fast clip. Similarly, I think Tech Mahindra with the new management, as they start to show the impact in the numbers, there also a lot of re-rating will happen. All three are working extensively on generative AI. And I think that's a space that globally IT companies are looking at because it might eat up into their share. And the interest rate reversal will obviously provide some respite to the BFSI sector, where most of these companies have a strong presence. 50 to 55% of revenues, 35% of revenues would be coming from that segment. So the interest rate reversal should work very good for them. So I think Infosys, LTIM, Tech Mahindra look like very decent long-term bets. I think even Coforge, with this recent correction, the amount of money that they are raising, I think This is giving you a very good dip once they come out with the plans that how they plan to deploy this 3,200 crores. That could again be something that could get back on an uptrend very fast.
Right. Sharadji, we at Business Today are trying very hard to get a bullish thought out of you. And given the grain that you possess of being very, very circumspect with rising stock prices, the our effort is becoming more and more difficult. Nevertheless, we'll be keeping an eye on mid-cap IT. However, how about a view on FMCG? We understand that you don't chase momentum, and you don't sort of like the growth phase of the market, which it currently is. But FMCG is down in the dumps. Anything that catches your fancy there?
No, I don't think you can call FMCG as down in the dumps across the board. We had identified Jyoti Labs around 1.5 years ago. That's done fantastically. But there are stocks that were trading at 60, 70 times with 10% kind of growth expectations. They have found it difficult to justify because the rural side of the pack has not done very well. I think Dabur maybe is a good bet at these valuations. You could take a bet on. Out of the new ones, maybe Honasa could be a good one with the new products adding up to the basket. Rest of the companies, they're not bad companies, excellent companies, you can't doubt them. But I think it's only the valuation part trading at 40, 45 times 1-2 year forward leaves very little scope for growth in the current numbers. So I think that is the only challenge that they have. Take a typical example of Asian Paints. It's not been doing much for so long just because it was trading at 90, 100 times of 10 times some multiple at one point in time. So I think it's been an aberration. Last 2-3 years, we had a very strong re-rating in most FMCG names. While it does work very well if you're holding on for a 10-12 year horizon. But over a 2-3 year horizon, it's very difficult to make money when you buy something at 50-60 times 2 year forward or 1 year forward. So I think that is what is playing out. And I think rural demand is showing signs. I believe today morning also there have been some reports which are suggesting that rural demand is coming back. So I think if that does come back, most of these FMCG companies are trading at the more or less median band of valuation that they should be trading at. If you can start to nibble, I think you can start to nibble at these companies in a small way. Dabur would be my preferred choice within the larger ones. I think HUL, etc., are still a tad expensive, but then HUL has always been expensive. It's a strong brand entity. So even that also can start nibbling in a bit. But don't go all in. I think you should stagger it over the next 3 to 4 months if you get much better prices.
Yeah, HUL sadly for long-term shareholders has been a disappointment. For the last 4 years, the stock hasn't done anything at all, and for equal measure, nothing has happened on Kotak as well for the last 3 years, and HDFC Bank continues to disappoint for the last 2.5 years. But such is the beauty of markets that once these long-term consolidation phases end, then stocks generally tend to double. Now, when they will end, only time will tell. But you can keep an eye on Kotak, you can keep an eye on Hindustan Unilever as well. What else is clicking as far as tailwind is concerned, Sharadji, is the beauty of gold financing coming back, gold financing companies coming back with a bang, both Manappuram and Muthoot Finance. Given a record high on gold, do you see the change in medium-term prospects of the likes of Muthoot and Manappuram? They've had a terrible time for 2-3 years, and now it seems that the spark is back.
Yes, if you look at gold companies in detail, gold finance companies particularly, you will see that occasionally they get into a zone of 1 or 2 years in a block of 7 to 8 years, where they usually underperform very pathetically. And I think that has played out over the last 1.5 years. And now once normalcy comes back, and I think the larger banks are not really focusing so much on the gold side of the business. Some of the NBFCs were also faced flag on that issue. And realization is coming into the fact that this is a very granular business where you need to have very deep presence into the regions where you want to work on these gold loans. So I think again the primary players who were there, they are benefiting out of that. And as the numbers start showing up, I think the price to book multiples could again claw back to say 2.5, 3 for most of these companies. And I think growth would be very good considering the type of LTV benefit that they would have because of rising gold prices. Though I'm not very bullish on gold prices, but gold has been doing very well over the last 1.5 year, specifically over the last 6 months. I think 3 months the rally has been stupendous. I think there is some uncertainty at the global level, which is leading to some global prices going up. Even the currencies is playing some role into it. But I think, yeah, gold companies might have one more leg of movement where they oscillate into a 2.5, 2.6 times price to book. They are still not there. I think forward numbers should be very good next year, and the year after that also should be very good. So next 3, 4 years, gold finance companies should be in a very sweet spot. They've just gone through a bad phase of 1.5, 2 years. So I think still you can stay invested in these companies for another leg of movement. On average, I think we'll be looking at 20 to 30% appreciation from current levels. For Muthoot, I was maybe working with targets of somewhere around 1800 for quite some time now.
Okay, got that. Mr. Avasti, the other space is the capital markets related stocks. They're coming back in flavor. So stocks like Angel One, they're doing well today. Sharp uptick can be seen on that one, about 5-6% odd. Bombay Stock Exchange, that's also moving up in trade. And there was a time when all of these stocks were constantly on an upward run. Record high levels were seen for these. And several times over they had changed. So again, you can see the high point of the day is what Angel One and BSE both are trading at right now. Even other stocks like Nuvama Wealth have been constantly now over the last few trading sessions ticking higher. MOFSL, that's moving up as well. Anything in this space that strikes your attention?
Generally, I'm not very bullish on the space. I think the valuation run up, particularly on the exchange side, has been very abnormal. Though the CDSL story is a good story to bet on, but it's long term in nature. On the index side, I think it's a bit aberration, right? A bits of aberration. On the broking side, I don't think Angel One is very expensive still. Maybe Edelweiss as a smaller firm is valued decently. So there you could be looking at targets of somewhere around, 90, 92, 95, $90 on Edelweiss. Angel One is not expensive in terms of comparative valuations because some of the other stocks have rallied much faster. But if I have to pick and choose one, I think maybe Edelweiss is a good story that I would bet on.
Okay. Sharp spike can be seen right now on these stocks, but at this point in time, Mr. Avasti is not very keen on this space. The other space that I want to discuss with you is, of course, with the onset of summer, we all, look at some of those summer stocks on the back of some huge demand. So be it the FMCG giants, or be it consumer durable stocks, be it the power stocks, this entire space is, buzzing in trade. So stocks like Havells, Voltas, Blue Star, Orient Electric, Crompton Greaves Consumer, that's up and about. I'm also looking at stocks like Varun Beverages, that's doing a sharp uptick. Of course, we've seen an outperformance from this one in the past 1 year, but 5% again, the stock is higher in trade. Power stocks definitely on the hopes of higher demand coming in. The entire pack is up. How would you really play the summer theme in the markets? Which is the best way to play this theme?
I think ACs is something that you could play out even in the long term. I think ACs is something within the consumer durable space. We would see very rapid growth over the next, 10, 20 years. We have been bullish about the air conditioning space. Within the semi-air conditioning space, you could look at the air cooler space. I think Symphony is a good name to add there. Stock hasn't done much recently, most probably 1 or 2 days since the heat wave news came out. After that, there has been some movement. But I still think it's a decently valued story, and they have also diversified regionally into Australia, Mexico, and I think the seasonality part will go out of that. The new product launches have been strong. They've expanded into many new markets and smaller towns. So I think all that should play out. The international presence that they established has not worked into their favor over the last 1.5, 2 years. But I think that should work very well now. Most things are stabilized. A local strategy that they have adopted even in Australia, that's working good. So I think numbers should show up over the next 1.5 years. That thing also. And this time the summer is also a bit harsher than the last year. So most probably demand will be much stronger. So companies like Symphony on the front line, Voltas, can't call it inexpensive at these valuations, but I think, yeah, if you are a very long-term player, you continue to hold on to Voltas. Blue Star would be a very good space to watch out. Even the industrial cooling part is adding. I think there is a lot of labor hours lost because of high heat conditions. So I think a lot of cooling on the logistics spaces and everything is also getting a lot of impetus. So I think Symphony is one stock that I would be very bullish on considering the current valuations and everything and the leading position in the cooler space. And the industrial cooling also picking up, international ventures or the international presence that they have established also picking up. So Symphony is one stock that I'm looking at. If you are willing to sit in a bit longer, I think even a Blue Star or a Voltas could be good bets to look at. Even a Havells could be a good story to look at. They have some presence in the AC space with the presence of Lloyd and everything. So I think these are three, four stocks that you look at, but if I have to pick one stock, I would go with Symphony at current valuation.
Fair point. Let's sort of take a detour now in the market. It's 321 already. The Nifty, ladies and gentlemen, has failed to sustain above 22,500. The same resistance level that we had mentioned, 22,530, came into the picture today. The index now at 22,428. Nothing much moving there, but absolutely crazy prices is what we are seeing when it comes to the way how markets are moving. And PNB I'd like to mark 136.65. Let me just see, 136.65 seems to have taken out the previous high. Just a moment please. Yes, the level that you see now is the highest since February of 2018. So that makes it a 6-year high on PNB, and that is accompanied by a very, very sharp spurt in volume. It's very difficult to get a buy call other than State Bank of India from Sharadji as far as the PSU banking basket is concerned. So we will not even try. But we'll ask him if anything catches his fancy in the defense space. Sharadji, blowouts happening on Cochin Shipyard, on Mazgaon Dock, on BEL. Any stock that you think falls into your lap or into your investment thesis, which our viewers can buy for the long term. So record highs on HAL, record highs on Cochin Shipyard, and record highs on BEL.
I think BEML would still make the cut. Rest of them, I think historically they have not demanded such valuation, but obviously the future outlook is very robust. The order book aggression has been very robust for most of these companies, HAL, BDL, BEL. But at these valuations, I think most of them are trading at about 20-22 times forward. And with today's blowout, as you mentioned rightly, the Mazgaons and the GRSCs of the world have gone up substantially. So I don't think that this is going to be such an easy sector to operate into, where every quarter you will have such improvements happening over the next 1 or 2 years. And this is a long gestation business. People are considering returns to be very fast. They could be in for some disappointment over the next, 6 to 8 months. And then the corrections could also be very severe for many of these companies. Though the offset clause, the way that it has triggered, it certainly opens up a very big opportunity. And we have been talking about this opportunity over the last 1.5, 2 years. But now I think it's a bit overstretched. Not to say that it cannot get more overstretched, because we are still talking about what, 20-22 times. I think the type of long-term opportunity there is, if there is too much fancy, you could easily look at 30-35 times for these stocks. So they might go up, but I would not be comfortable buying the rest of the pack. I think if I have to pick one, which is a mix of railway, infra, as well as defense, I think BML does make the cut. I think growth rate should be strong there. So BML is one stock that I would like to bet on.
Since you briefly mentioned the railway pack, is stock like IRCTC that's been pulling up on your radar as well? And which other railway stock would you be comfortable adding on dips?
I think RVNL is one story I would like to look at. The international opportunity that would convert for them could be very big. IRCTC I've never been a very big fan of. I can hardly fathom the kind of valuation it trades at, but I was not comfortable at 600. It's gone up to 900. So that's a different ballgame. Uh, Even IRCTC, I think you do not have an NP overhang there, so traditional business metrics or valuation metrics would not work there because most of the work is for the railways. But I think if I have to pick one, I would be comfortable picking on RVNL. I think more or less an engineering capability company. The re-rating could be very strong as most engineering companies are trading at much better valuations. The railway capex is expected to be smart enough. The international opportunities could really snowball them into a totally different league. So I think RVNL is still a bet I would like to bet on dips or even at current prices gradually, accumulate for a period of time.
Okay, so RBNL is looking positive from the railway pack as of now. Let's look at if we have missed asking you anything. Metals pack, is that a space that you track closely? We've been listening to some commentary from last few days where commentary around metals is improving. But the point is that, this is a cyclical sector and large institutions usually stay away from this space. But is there merit that retail investors should be building up their positions in this space? Of course, we've looked at positive data for a lot of production data that's come in for many of them, mines and metal companies. Is that a positive trigger that one should be betting big on?
Uh, can bet on it, but again, cyclicality plays out, and you have to combine with good numbers and good price movement at the finished product level. And usually, that's a very rare combination you get. I think around 2 years back, also, we were very gung ho about metals getting into a full blown reversal cycle where things would change drastically. But not much happened and prices corrected. Even now, I think prices are high. Maybe copper has some long-term fundamentals in place that could trigger a supply shortage over the long term. But then Hindustan Copper more than adjusts for that valuation. So I think maybe Hindalco could be a good bet considering aluminium and copper combined into that. But generally, I think the metal stocks have rallied a bit based on the China sentiment upbeat and a reversal in China. The markets there had crashed very substantially over the last 1 year in total disarray with the global markets. So I think that recovery is playing out, but I'm not very hopeful of a full-blown recovery in China. And gradually, as flip-flop comes in, I think gradually you will also have lower prices for most metal companies. And at these valuations, most of them are trading at what, anywhere between 11 to 14 times forward earnings and not much growth over the next 1.5 years. So I don't think metals do make sense. I would use this current rally to book my profits and exit out of the metal and mining space.
Fair point. Like I said, caution is a byword when it comes to selecting stocks and mentioning them on the long side as far as Sharadji is concerned. Thank you so much, sir, for your time. Let's just start wrapping up the markets. There are just 2 minutes left. So Wednesday, which was the weekly expiry for the Bank Nifty, it's done pretty much nothing. A move of about 110 points on the green side as far as the index is concerned, 47,650. It's the IT index that has shown to some extent as far as large cap indices are concerned. 239 for you, up about 1/7%, 35,036 in front of you. The Nifty, as I had mentioned, has done absolutely nothing. Range bound, days high 22,530, days low 22,350, and within that you got one trade in the morning, which we had sort of predicted in our early morning commentary. Now let's look at what's happened in the broader markets. Hectic activity on the long side. A record high on the Nifty mid cap 100 index, 49,700. Very strong moves coming in on the small cap 100 index. In fact, it's the second best gainer today, 1.2% higher, and taking it away is the Nifty PSU banking index, 2% higher, 73.22. The record high is 74.41, and given the momentum that you're seeing in PNB today, in Canara Bank today, a host of smaller stocks such as Central Bank, Maharashtra Bank, as also City Union Bank, it's only an inevitability that you'll see a fresh high coming into the Nifty PSU basket. It's just running away. Bank of Baroda days high, taking out the second resistance, 275.70. AU Bank, it's a weekly high, daily high, and a monthly high on AU Bank. What else is moving as far as the Nifty is concerned? We've seen pretty difficult times for this one, but the top gainer on the Nifty today is Ultratech Cement, 5% higher, 10,538. TCS 3% higher, 4,000. Hero Motors 2.2% higher, 4660. And Eicher Motors 1.9% higher, 39.95. Stocks that have slipped in trade today are led by Reliance Industries. It's at 27.73. I think my price is incorrect. I won't mention it on air. Maruti's dipped a bit, 0.5%, 12.471, and Bharti Airtel 0.33% lower, 12.04. That, ladies and gentlemen, draws to a close as far as markets coverage is on business today. Remain glued for what is the best news that comes for financial updates on our channel. Thank you so much for your time.
The Business Today Accenture Leadership Dialogues brings me to the most exciting destinations across the country where we talk tech, innovation, and this time, something very close to my heart, auto as well. I'm here at the Maruti Suzuki Innovation Gym to do a lot of heavy lifting in Gurgaon when it comes to ideas, tech, innovation with